So you've discovered ICT concepts and you will never be able to unsee the markets based on how you see them today. You've learned about how the algorithm manipulates traders and turns them into liquidity, but you still don't know which liquidity levels you should be trading from and which liquidity levels you should be targeting. In this video, I'm going to share with you the easiest ICT liquidity strategy that has got me funded over $800,000. I'm going to show you exactly which levels of liquidity you should be trading from. I'm going to show you exactly when to enter, when to exit, and where to place your stop loss. This is a proven strategy that is backed up by real data, and this strategy is simple and fully rules-based. With that being said, let's dive in. The goal of a successful ICT trader is to be in line with the algorithm. If the algorithm is raiding liquidity in order to enter, then so should you. And no trading setup should ever neglect liquidity. So let's say that we're bullish in the market, and let's say that we see a raid of liquidity to the downside. Like, how do we actually know if this is a valid liquidity raid? And this is through something called displacement. And so we would need to see a form of displacement out of this area in order to indicate that market makers are actually in control of this market. This basically shows that buyers are showing intention in this market, and then we can look at targeting higher prices. Let's say that we're sell buyers in the market. Then we would be looking for a raid of buy-side liquidity, and then we would need to see a form of displacement out of this area to indicate that market makers and bigger players are showing clear intention in this market. And then we can look at targeting lower prices. And so without waiting for a displacement out of this area, you will never know if this is a valid liquidity raid or if this is a breakout to the upside. And so what this displacement does right here and right here is it allows the market to show its hand. Because the main problem is if you don't wait for a raid of liquidity, it's extremely likely that you will end up becoming the liquidity. And this is why no trading setup should ever neglect liquidity. Okay, so now let's break down some live trade examples. And so one of the biggest problems that traders are facing is they don't know when to look for these liquidity rates. And the solution to this is time-based liquidity. You want to be looking for these liquidity rates during the New York session. This is between 8 a.m. until 10:30 a.m. Eastern. And you want to be looking during the London session, which is 3 a.m. until 5 a.m. Eastern. Because think about it logically. Do you think that market makers are going to be looking at raiding liquidity when the most amount of liquidity is available, or when there's little to no liquidity available in the market? And so hopefully that should be very, very simple. And it's when the most amount of liquidity is available. And this is during the London kill zone and also the New York kill zone. Okay, so now let's break down this trade step by step based on what I've just taught you. Okay, so we're looking at the US 500 on the 15-minute time frame. And this was the 27th of May, 2025. And so this trade was taken just last week. We're looking at bar replay mode on TradingView because of course I'm playing this back as if it's happening in real time, but I will share with you execution proof in just a moment. Okay, so the first thing that we always need to establish is what is our daily directional bias. All this simply means is, are we looking for longs today or are we looking for shorts today? And this is where you're going to have to hear me out. And it's at this point where I go against the grain. I want you to head over to the indicators tab at the top of your screen, and I want you to type in EMA 20, 50, 100, and 200. It's this indicator right here by Dr. Sweets. I then want you to navigate over to the top left of your screen, double click the indicator, and you can uncheck the 20. Then click OK. And the reason why we use exponential moving averages is because it gives us a very simple and objective way in order to identify our daily directional bias. Because a huge problem that so many traders are facing is they're using subjective ways in order to identify their daily directional bias. This could be based on 4-hour order blocks, daily fair value gaps. And you know, there's infinite amount of subjective ways in order to identify your daily directional bias. And what that simply means is if you do not have a objective way to identify it, then it is extremely likely that your backtesting data is not reliable. And so we can very simply identify our bias. The 50 exponential moving average is greater than the 100, which is greater than the 200. So this simply indicates a long daily directional bias. All that simply means is the draw on liquidity is to the upside and that our expectation is higher prices in this market. Next, we need to identify the previous session's highs and lows. And so we have buy side liquidity resting above the London session high, and we have sell side liquidity resting below the London session low. Because we are long bias in this market, we need to see a raid of sell side liquidity before we can look for a potential long trade in this market. So this is what we call time-based liquidity, where we're using the previous session's highs and lows. So we're waiting for a raid of sell side liquidity during a New York kill zone. And this is where so many traders go wrong. They're looking at entering in this market. They understand that directional bias is to the upside, but they have not seen a raid of sell side liquidity. So I want you to ingrain into your mind, if we have no raid, we have no trade. And so many traders would have been stopped out right here because they understand directional bias, but they have not seen a raid of liquidity. And so this is your raid of liquidity right here. And this will be running all of the sell stops that are resting below the London session low. And so this will be inducing traders short into this market. What this also will be doing is stopping out any early buyers from the London session. And so this further floods the market with more sell orders. Again, this is where I go against the grain. All that we're simply waiting for is a 15-minute bullish confirmation during a New York kill zone. And so this is your bullish confirmation right here. We can enter on the break of this candle high. For me, this would be via a buy stop in the market with invalidation always below the liquidity sweep low. And then I'm always looking at targeting a repeatable 1 to 2 in the market. A huge problem that traders are facing is they're changing their take profit parameters every single trade. And it's very important that you target a repeatable risk to reward to ensure that your backtesting data is extremely reliable. Because as soon as you start targeting levels that may be subjective in the market, this will completely skew your data. And therefore your backtesting data will become very unreliable in the market. And just for full transparency, I want to share with you the exact entry that was shared with all exclusive members. As you can see, this was the 27th of May 2025. And as you can see, this trade was triggered at 3 p.m. GMT. And now it's just a case of setting and forgetting your trade. It's either take profit is hit for a 1 to 2 risk to reward, or your stop loss is hit for a -1 R. And so there's no micromanaging in these positions. And as you can see, within 2 hours and 45 minutes, this trade did hit take profit for a 1 to 2 risk to reward. And so this was a valid A+ setup, a daily directional bias using the 50, 100, and 200 EMA. We're using time-based liquidity. We're waiting for a raid of sell-side liquidity, and then we're waiting for a form of displacement into this market. And this was via a 15-minute bullish confirmation, indicating that buyers are present in this market right here. And you could easily drop down to the 1 minute or 2 minute time frame, looking for a break in market structure to the upside, or even looking at fair value gaps or inverse fair value gaps. But what if I told you that you don't need to drop down to the smaller time frames? Because just think about it logically. If this 15-minute candle's closing bullish, and then we've gone ahead and broke this candle high, I know for absolute certain that even if we drop down to the 1 minute or 2 minute time frame, you're gonna see breaks in market structure to the upside. You're gonna see 1 minute fair value gaps created, and so we don't need to drop down to the smaller time frames. And that's why this system only requires 15 to 20 minutes of chart time each day in the markets. And so this right here is what I like to call stress-free trading. Okay, so I'm gonna break down another trade example. So we're looking at the US 500 on the 15-minute time frame. And of course, the first thing that we need to identify is what is our daily directional bias. As you can see, the 50 EMA is greater than the 100, which is greater than the 200. So this indicates a long daily directional bias. Next, we can go ahead and mark on the previous session's highs and lows. This is your London session buy side liquidity right here. This is your London session sell side liquidity right here. Because we're long biased in the market, we need to see a raid of sell side liquidity. And so this is your raid of liquidity right here. So this is running all of the sell stops that are resting below the London session low. And so this will also be stopping out so many traders. We've then got a bullish 15-minute confirmation. And this is during a New York kill zone. So my entry was on the break of this candle high, and this was via a buy stop in the market. Of course, my invalidation went below the liquidity sweep right here. And then I was simply looking at targeting a repeatable 1 to 2 risk to reward. And so again, just in case anybody's thinking that I'm cherry picking these trades, here was the exact entry that was sent ahead of time to the exclusive community. And this was one of the fastest trades to ever hit my take profit. And you won't believe that this trade literally hit take profit in just 2 minutes. And it wasn't even due to a high impact news release. What I will say though is this manipulation right here was created by some high impact red folder USD news, and you will find that this happens over and over again in the markets. High impact red folder USD news often creates the manipulation before we get the continuation to the upside. So whenever you have high impact news, these are often when we get the highest probability setups. And so this was a valid A+ setup, and I would take this trade every single day if it did present itself within the markets. So if you'd like to learn more and you would like to see me trade this live every single day in the markets, and you would like to learn the exact blueprint to this fully mechanical rules-based trading system, because there's so much more to learn. And I will also show you how to filter for A+ setups in the market to ensure that you're only taking the highest probability setups. I've also made over 40+ educational videos breaking down my proven momentum mastery system step by step. If you're interested, then the link is in the description down below. As always, thanks so much for your time and support, and you take care. Bye bye.